Hey guys, Andrew McFarland here from StartAJuiceBar.com. Hope you are feeling phenomenal. And today I want to talk about when should your juice bar actually be profitable? This is a question that's come up, and so I wanted to make a video answering this and just to give you guys some perspective on how much money you should save and reserve capital and what kind of trends that we've seen with our own juice bar businesses as well as some of our clients, just to give you some more insight on this. And as always, thank you to those of you who have been liking the videos, commenting, subscribing to the channel. If it wasn't for you guys, we'd be making this content, so it always feels good to know that you appreciate it. So first off, what is the normal framework of time that you should expect to be profitable in your business? Now, this is going to depend naturally on a lot of factors. How saturated your market is, how busy your place is. Are you a new business in an area that people are just really excited about juice, and so from day one there's lines out the door? Could be a lot of things, and so I'm giving you this information just to let you know what has been sort of normal for us, what we've seen as the standard, and then just know that your situation is going to be unique to you. I've talked to people who reached out to us for support, and they've mentioned that they've been in business for 3 years and just started to break even and make a little bit of money. Now, that hasn't been normal for a lot of our clients, but sometimes that's the situation. Most of the time what we've seen is on average about 3 to 4 months before the business actually starts turning a profit. It might not be a huge profit at that point, but actually start turning a profit. So that's about the average that we've seen. A lot of times in the industry, they might tell you expect to be running negative for about a year. I've seen that as well. From our experience with our clients, that's usually pretty rare. It has happened, but it's rare. We've also had clients who have from month one started making money because they've just been at the right location, right time, right execution, and they've been profitable, very profitable from the first month. Once again, this isn't really normal, but it can happen. And so be aware that the 4-month mark is usually where I'd say if you're not profitable at that point, you probably need to double down on your marketing and put more energy and attention there, or really focus on managing your food costs, focus on managing your labor more tightly. These are all things that you guys have heard me talk about before, and if you haven't taken the online course, I dive deeper into that conversation there. But these are the big and major areas of expense, your food costs and your labor costs. And so if by month 4 you're running those as tightly as you can, then it's probably a marketing issue, and hopefully this isn't the case, or you're just in a really poor location and there's nothing you can do because your market just isn't ripe for this kind of business. But hopefully that's not the case. Okay, so that's the first thing I want to say. The other thing is looking at recouping your initial investment, because obviously there's the point where you're going to run cash flow positive, but if you've invested $150,000, $250,000, $300,000 into your business, at what stage are you going to start breaking even on that initial investment where you're not in the red anymore? That's going to depend on what volume of sales you're doing. Right? Because there's one thing to run profitable, meaning that you are making more money than you're spending, but that might only be $1,000 a month. That could be $10,000 a month. That could be, we've got clients netting $30,000 a month. So if you're at $30,000 a month positive cash flow and you've invested, right, $300,000, that means it's going to take you 10 months before you break even on that initial investment. So that's one way to look at it. This is a bigger conversation. That really, really depends on so many factors, and sometimes it can be a year and a half, it can be 2 years, and it can be much longer than that. But I would say if your business is healthy and things are going well, you're going to see your initial investment get recouped after about the first year, year and a half to 2 years on the longer side. That is if your business is running well and it's healthy. The other thing to think about, because that can seem like a long time, potentially, depending on how you're looking at things. And if this was, let's say, hypothetically real estate, most of the time you're not going to make your investment back on a property. If you were to invest $150,000 in a house, let's say, or $200,000, you're not going to make $200,000 off that property in a year and a half to 2 years. That almost never happens in any real estate market, period. So this is definitely a little bit different. Naturally, this is a little bit considered categorically higher risk than most real estate investments, which is why it's higher risk, higher reward. And so I just want to say that to put that in context as well, to realize that it depends on how you're framing it in your mind, whether or not you feel that that's a long time or a short period of time. And the other thing that I wanted to say is you got to be aware of when you're building a business that you're actually also building an asset. So think about the asset value of the business, because if you have a business, hypothetically, let's say after the 4th month, it started to cash flow positive, you have an asset now that you could, at some stage, if you want to sell, you can sell, right? Your business isn't going to be insanely valuable. Maybe after 4 months, you'll have the equity value and you'll have the potential from the cash flow that you're having, but you're still building an asset. So don't just think strictly about the cash flow in terms of the timeline. Think about the asset value of your business, because you're building something that has positive cash flow. And other business owners and investors want to buy businesses and invest in businesses that have positive cash flow. So even if it takes you a year and a half, 2 years, 3 years to recoup your initial investment, you still have a very valuable asset in your business if you are cash flowing positive. So I hope this gives you a little bit of framework. This is a really quick video. I think it's quick. Actually, I don't even know how long I've been talking now, but just wanted to have this conversation to give you guys some insight into how to think about the way that the business is going to turn a profit. And so that way you could also prepare and plan to have some reserve capital set aside so that you're not just drained down to the point where you have $0 in your bank account and you're ready to open, because in that situation, you have to make money day one, because if you don't, you're going to go out of business. So always make sure you have some money set aside in reserve capital. Sometimes we say in the range of 10, 15, 20%, depends on how much you've spent starting your business. But you want to have some capital set aside for your labor, for that negative expenditure for the first number of months, so that way you can get through that hump, build that momentum that you need, and then eventually start cash flowing positive and recouping your initial investment back, making more money, and feeling good about your business. So hope this helps. Once again, thank you guys for watching the channel. If you have any questions or comments, put in the comment box below. If you like the video, press the like button. If you're not subscribed, I invite you to subscribe. Follow us on Instagram. And if you guys don't know, we have a podcast, Juice Bar Expert Podcast, on iTunes. Just search Juice Bar Experts. You should find us. And we'll also put a link in the description below. This is Andrew McFarland with StartAJuiceBar.com. See you soon.